Good morning, everyone, and welcome to today's webinar. For those of you who have just logged on, we have already completed a sound test, and thanks to everyone who helped out with that. First, I want to introduce ourselves. My name is Holly McHugh, and I'm a marketing executive here at Payroll Software. And also joining me to present today's webinar is Rachel Hines, who is the Marketing Manager at Payroll Software. In today's webinar, we're going to discuss what you need to know about the extension of the Employment Wage Subsidy Scheme until the end of December 2021, including enhanced eligibility rules and the requirement to submit turnover or order details to revenue. For part 2 of today's webinar, we'll also look at important tips for managing employees as lockdown ends and as you return to the workplace. Finally, at the end of the webinar, we will have a questions and answers section where we will answer any questions that you may have. For our questions and answers session, we'll be joined by Paul Byrne, who is the Managing Director here at Payroll Software, Audrey Mooney, who is our Customer Support Manager, and Jennifer Patton, who is our HR Consultant here at Payroll Software. If you have any questions, you can type them into the questions box on your control panel at the side of the screen, and we will try to get through as many questions as possible. Just to note, we have a lot of attendees on today's webinar, so we won't have a chance to answer every single question. This webinar is being recorded, and all attendees will receive an email later today with the link to the recording, so it's no problem if you do need to leave at any stage. Also, in the email later today, there will be a copy of the presentation slides that we are using today. Or you can also download the slides right now if you wish on the Handouts tab on your control panel. We will also include some useful documents and additional resources in the follow-up email later on today. Now that all of the housekeeping is out of the way, we may as well get straight into the webinar, and I'm going to pass you over to Rachel to start off with the changes to the Employment Wage Subsidy Scheme.
Thanks, Holly. So starting off with the Employment Wage Subsidy Scheme, also known as the EWSS, this scheme was introduced last year and it replaced the Temporary Wage Subsidy Scheme from the 1st of September 2020. The scheme has now been extended until the 31st of December 2021. The EWSS is a subsidy paid to an employer, not the employees, and so it's not going to have the same tax implications as the TWSS, where employees faced tax shortfalls at year end. Under the EWSS, employers receive a flat rate subsidy per employee per week, depending on the employee's gross weekly pay. For the first few months of the scheme, the subsidy payable was €203 or €151.50, depending on the employee's gross weekly earnings. However, in October, the subsidy rates increased, ranging between €203 and €350. These enhanced rates will remain in place until the end of September, and a decision on the rates that will apply from October is expected in September. The government are also considering the introduction of an employer contribution to employees' wages under the scheme for October onwards, but nothing has been confirmed as of yet. And just to note, the subsidy is not available for employees whose gross weekly earnings are less than €151.50 or greater than €1,462. With the extension of the EWSS, a change was also made to the scheme eligibility. The threshold of a 30% reduction in turnover or customer orders has been maintained. However, to benefit more firms, the time period for assessment has now been broadened from 6 months to a full 12-month period. Businesses are now required to compare the financial projections for the period from January to December 2021 to the actual reported turnover for the same period in 2019. Businesses must expect to experience a 30% reduction in turnover or customer orders during this time period in order to be eligible for the scheme. This will allow businesses whose trade was severely impacted due to government restrictions in the first half of 2021 to trade at higher levels for the second half of 2021 compared to 2019 and still be able to avail of the scheme. As well as meeting the required reduction in turnover or customer orders, employers must also have up-to-date tax clearance from revenue in order to avail of the scheme. And employers can check their current tax clearance status through Roth. Where a business commenced trading between the 1st of January and the 31st of October 2019, you will need to compare the reduction in turnover or customer orders from the date of commencement to the 31st of December 2019. Or where a business commenced trading on or after the 1st of November 2019, you will need to compare the projected turnover or orders from the 1st of January 2021 or the date of commencement if this is later to the 31st of December 2021 as if the pandemic had not occurred. And just to add also that childcare businesses continue to be eligible for the scheme without the need to demonstrate a 30% reduction in turnover or orders, but they do need to have up-to-date tax clearance. And I'm going to pass you back again to Holly.
Thanks, Rachel. Employers are required to review their eligibility status on the last day of every month to ensure they continue to meet the eligibility criteria. If, after this review, you no longer meet the eligibility criteria, you should deregister for EWSS with effect from the following day, that being the 1st of the month, and the EWSS markers should not be included in payroll submissions to revenue. If you become aware that you will no longer meet the eligibility criteria prior to the end of the month, for example, if you received an unexpected donation or grant at the start of a month, you should deregister immediately and cease to claim subsidies. If circumstances change the following month and you are once again eligible, you can re-register and claim from the date of re-registration. It is not possible to backdate the claim to include the period of deregistration, as that correctly reflected the employer's expectation at that time. Perhaps the biggest change to the EWSS recently is the requirement for employers to submit an online monthly EWSS eligibility review form through Roth. This is also known as the E or F. For employers who started trading before the 1st of January 2019, you will need to provide details of actual monthly turnover or customer order values for 2019. Along with the same details for the first 6 months of 2021. You will also need to provide details of monthly projections for the remainder of 2021, that is July to December 2021. This initial submission must be made between the 21st and the 30th of July 2021. For each month going forward, you will need to resubmit the eligibility review form by the 15th of the following month, and this will involve providing details of the actual figures for the previous month and reviewing the original projections for the remainder of the year to ensure the projections are still accurate. For example, before the 15th of August, you must submit the actual figures for July and review the projections for August to December. Failure to complete this return will result in suspension of payment of your EWSS claims. By submitting the eligibility review form before each deadline, it will provide assurance to both employers and revenue that subsequent EWSS claims are appropriate and in line with terms of the scheme. This, in turn, will reduce the possibility of employers claiming EWSS amounts to which they are not entitled and therefore having to repay those amounts to revenue. As part of the monthly submission, employers must sign a declaration that the information submitted is correct and accurate with the best estimate projections for future months. Childcare businesses and businesses who commenced trading after the 1st of November 2019 will have to complete a declaration as part of the Employer Eligibility Review platform on ROSS to confirm their exemption. This needs to be undertaken on a once-off basis before the 30th of July to ensure exemption from the requirement to complete the electronic form for the remainder of 2021. Businesses who commenced to trade between the 1st of January 2019 and the 31st of October 2019 are required to complete all fields in the eligible review form, and their eligibility review calculation will be adjusted systematically to account for the shorter review period, that of date of commencement in 2019 to the 31st of December 2019 versus equivalent dates in 2021. And I'll pass you back to Rachel.
Thanks, Holly. So just to talk you through the process of completing the EWSS eligibility review form, first you need to log into ROSS and select EWSS eligibility review under Employer Services. On the first screen, you will need to select whether you are a new business who has commenced trading on or after the 1st of November 2019, if you are a registered childcare provider, or if you are another business. So first, I'm going to look at new businesses or registered childcare providers. And if you choose these options, you will need to agree to the declaration and then sign and submit the ERF. This only needs to be completed once in July 2021. There is no requirement for these employers to do this every month. So next, I want to show you the process for all other businesses. And the first time you complete the ERF, you will need to provide details of the actual monthly turnover or the customer orders for 2019. And these figures cannot be altered once submitted. You'll then need to provide the same information for January to June 2021. And again, this is only required in July when the form is being completed for the first time. Further down the screen, you will need to provide details of the projected monthly turnover or customer order values for July to December 2021. When the screen is completed in July, it will include all projected amounts. And then in August, you must submit the actual amounts for July, and amendments can be made to the projections previously submitted for August to December 2021 if necessary, and so on for each subsequent month. The reduction in turnover or customer orders will then be automatically calculated by comparing the 2019 actuals with the 2021 actuals and projections, and confirmation of your eligibility will appear on screen. Or if you don't meet the 30% reduction, a warning will appear on screen notifying you that you need to deregister and stop submitting EWSS claims. On the final screen, you need to agree to the declaration that the figures are accurate, and finally sign and submit. And if you want more information on how to complete this form, Revenue have recorded a presentation which explains it in more detail, and we will include a link to the video of the revenue recording in an email to everyone later today. And I'll pass you back again to Holly.
Thanks, Rachel. Upon receipt of the EWSS eligibility review forms, Revenue will be undertaking compliance checks with randomly selected employers. All records relating to the operation of the EWSS must be retained, especially the monthly reviews demonstrating the required 30% reduction in turnover or customer orders. In line with best practice on transparency around recipients of state aid, Revenue are publishing the names and addresses of employers who received EWSS, and these are published on the Revenue website every quarter in January, April, July, and October 2021 and January 2022. Where an employee or any other person becomes aware of any abuse by an employer operating the scheme, they can report this to Revenue on a confidential basis in writing through My Inquiries or on the Revenue website. Where Revenue becomes aware of potential abuse of the scheme, early engagement will be initiated with the employer, who will be required to provide all of the necessary information and supporting documentation requested. Where Revenue have determined that abuse has occurred, significant and serious sanctions will be imposed, such as exclusion from the scheme, repayment of EWSS grants, including interest and penalties, and for very serious breaches, the employer may face criminal prosecution. Next, we'll look at eligible employees. During the Employment Wage Subsidy Scheme, you can claim a subsidy for eligible employees on the payroll of an impacted business. Employees are eligible if they are in receipt of weekly gross wages between €151.50 and €1,462. There is no legislative requirement that employees are actively working to be eligible for the EWSS. The subsidy can be claimed for certain proprietary directors. You can claim the subsidy for proprietary directors if you meet the eligibility criteria for the EWSS and the proprietary director is on your payroll and you paid wages to the proprietary director which were reported to Revenue on your payroll at any stage between the 1st of July 2019 and the 30th of June 2020. Where the person is a proprietary director of 2 or more eligible companies, a claim for the EWSS can only be submitted for one company. EWSS cannot be claimed in respect of certain connected parties. These are connected parties who were not on the payroll and paid at any time between the 1st of July 2019 and the 30th of June 2020. Connected parties include an individual's spouse or their brother or sister, aunt or uncle, niece or nephew, linear ancestor, or descendant. Additional excluded employees are those employed otherwise than as part of a business. Examples of these employees are domestic employees such as childminders, housekeepers, and gardeners. And back to you, Rachel.
So next is how the EWSS works in Payroll Software. Where the scheme is being operated, an indicator will be included on the payroll submission to Revenue to indicate which employees you wish to claim EWSS for. On receipt of the submission, Revenue will calculate the subsidy payable based on the employee's gross pay the pay frequency, and the insurable weeks. EWSS payments will generally be paid into the designated bank accounts of eligible employers within 2 working days after receipt of the payroll submission. There continues to be a 0.5% rate of employer PRSI, which applies for employments that are eligible for the subsidy payment. Employer PRSI must be calculated as normal through the payroll, for example on PRSI Class A1. Revenue will subsequently calculate the PRSI credit by calculating the difference between the employee's rate reported via the payroll software and the 0.5% rate. This credit will then show on the statement of account within ROSS and reduce the employer's liability to revenue. And finally, I just want to quickly show you how to add or remove that EWSS marker in the payroll software. In Thesaurus Payroll Manager, you can add or remove the EWSS marker for all employees or on an individual basis. To do this individually, access the employee's record within Add and Amend Employees. So first I need to select my employee. And within the revenue details settings, you will see a tick box here to indicate that you are registered for EWSS and this employee is being claimed for. And so to avail of the EWSS for this employee, simply tick the box, and going forward, the EWSS marker will appear on the PSR to revenue for this employee. Or if you have reviewed your eligibility and determined that you are no longer eligible, it's just a matter of unticking this box, and again, click on Update to save the changes. So that's the process for an individual employee, but as I mentioned, this can also be done in bulk. To add or remove the EWSS marker for all employees at the same time, go to the EWSS menu and select Start Claiming EWSS for all employees or Stop Claiming EWSS for all employees, depending on your eligibility status, and this will add or remove the EWSS marker for all employees on the selected pay frequency. So next I want to show you this on BrightPay, and to add or remove the EWSS marker, first we need to go to the Employees tab, and within the Revenue Details settings, like with Thesaurus software, simply tick that you wish to claim EWSS subsidy for this employee in this pay period, or untick the box if you want to stop claiming the EWSS subsidy for this employee, and I'll save the changes. And as well as accessing this tick box in the Employees tab, you can also access it from the payroll screen. So if I click into an employee here, at the right of the screen, you can click on Edit Settings and you will see the tick box here as well. So I'll pass you over to Holly now for the final section of today's webinar.
For the final part of today's webinar, we're going to look at top tips for managing employees as lockdown ends. And we're going to keep this part of the webinar quite short, as I can see a lot of questions have come in already on the EWSS. COVID-19 has been a turning point for many businesses to recognise just how beneficial flexible working can be. Therefore, in the long term, we are likely to see a big shift in the dynamics of the workplace, with many employees favouring to work a hybrid model of some days in the office and some days at home. But regardless of where the employee is working, regular communication is an essential way to help your teams adjust to the new working environment. Without it, your employees can feel disconnected, morale can dip, and priorities can become confused. With an online employer and employee portal, you can communicate directly with employees at the touch of a button. In our add-on products, Thesaurus Connect and BrightPay Connect, you will find a document upload feature, which ensures company documents are organized and that employees can securely access HR information anytime, anywhere. Sending this important information directly to the employee's phone is so much more powerful than simply sending a company-wide email. The click rate of a push notification is 7 times higher than that of email, and so Connect is a great way of communicating with employees when it comes to important updates. Plus, it means that you have a record of who has read each document and when. So it's a great way to protect you as an employer. So just to explain Connect a little bit more, Connect is an optional add-on that works alongside both BrightPay Payroll and Thesaurus Payroll Manager. The payroll is still processed on the desktop application, but the payroll information is stored online on a secure cloud server. With Connect, you can benefit from automated cloud backups and a secure online portal for employers and employees. So I'm going to jump into the online portal now to show you some of the different features. Here we are in the online employer dashboard, and you can see a notification on our dashboard where an employee has requested annual leave. You can set up managers as users on Connect so that they can be responsible for approving leave for employees within their departments. And you can also set it up that these managers don't have access to any of the payroll data or confidential documents. Before approving a leave request, you will be able to click into a company-wide calendar, displaying who is on leave and when, so that you can ensure adequate staffing levels before approving the leave request. For example, here you can see there are 4 employees on leave on this particular day. You can also go into the Employees tab, where you can access each individual's employee's profile, which includes their payslips and personal contact details. Next is Reports, and here you can run any type of report that is saved in the payroll software without actually needing to go into the payroll software, making it very easy to run payroll reports on the go from any internet browser. One last tab that I want to point out here is the Documents. With Connect, you can upload any type of document or resource that you want to distribute to your employees. So, for example, a company handbook, a contract of employment, the weekly roster, your COVID-19 response plan, information on what the EWSS means for employees, or even a vaccine policy, for example. And just to let you know, our sister product, Bright Contracts, now includes a COVID-19 vaccine policy that applies to any business. This policy is in addition to the COVID-19 response plan and temporary working from home policy currently available on Bright Contracts. And finally, by introducing Connect, employees can access a self-service smartphone and tablet app. The employee will get a notification on their device if a new payslip is available, if a leave request has been approved, or if their employer has shared a document with them. Within the app, the employee can view a payslip library and access HR documents. They can also view their annual leave calendar and request leave from their smartphone, and they can view and update their personal contact details, all without needing to contact HR. So I'm going to finish up there with the sales plug, but if you do want to find out more, we do run online demos of both the payroll software and the Connect add-on a daily basis. So please do let us know if you want to book onto one of the free demos. And that brings us to the end of the presentation today. We covered a lot on today's webinar, but we will send everyone an email later on today, and this will include a copy of the slides and a link to the recording of today's webinar. So it's now time for the questions and answers. And if you have any questions, please feel free to type them into the questions box, and we will try to get through as many questions as possible. As I mentioned, however, we have a lot of attendees logged on today, so unfortunately we won't have a chance to answer every single question. And I see a lot of questions have come in already. For our questions and answers today, we are joined by Paul Byrne, who is the Managing Director here at Payroll Software, Audrey Mooney, who is our Customer Support Manager, and Jennifer Patton is on in the background as well for if there are any employment law questions. And Jennifer is a HR consultant here at Payroll Software. Audrey has been keeping an eye on the questions as they have been coming in, so I'm going to pass you over to Audrey to manage the questions.
Thanks, Holly, and good morning, everyone. Yeah, so there are, I suppose, quite a lot of repeat questions, so we will try and avoid those as much as possible. So we'll get started there with the first one. So TWIS reconciliation completed via Ross prior to the deadline, but amount has not yet been debited from our bank account. Is there a specific date for collection?
Hi, Audrey. Hi, everyone. Paul here. I suppose just to start off by saying, I suppose the main message we have this morning is to make sure you complete this declaration, because it's something that could easily slip through the cracks with a lot of employers. I gather anybody in this webinar will know that they need to do this. If you know of any colleagues in employment that are claiming EWSS, please mention to them as well that they need to complete that declaration, because revenue will eventually suspend their eligibility if that isn't done. And it might be easy for people if they're not, if they haven't reopened, or they're working from home, or they, just not getting the messages from revenue properly, that it might actually slip through the cracks. Anyway, just in relation to that particular question, first of all, I suppose I'd imagine you need to complete a single debit instruction for the actual payment itself. I'm just wondering, did you do that? But I haven't actually seen the screens for paying the actual the TWSS refund. But I'd imagine it's, you actually do have to do some clicking on the ROS screens and filling in the single debit instruction.
Yeah, I think the statement of accounts only going out this week, Paul?
Yeah, but it's, at the same time, it's not going to be an automatic debit. I'd imagine it will still need, somebody to actually go in and complete the single debit instruction on ROS.
Yeah, and for some people, it'll automatically go into debt warehousing, won't it?
I'm not 100% sure how the debt warehousing will work in that case. But yeah, that could be the case, all right.
Okay, the next question there is, we uploaded our July PSR to Ross yesterday. Will we receive the EWSS payment this week as we did in previous months, or do we have to wait until after the 15th of July submission?
Yeah, my understanding it's all going to continue as before. It's not a case that they have to wait for the declaration. The declaration will inform revenue as to whether somebody continues to qualify and whether somebody should have qualified for a previous claim, but they will still continue to pay, as far as that's my understanding.
Yeah. Okay. The next one there is regarding the declaration for the period January to June 2021. Will revenue look at the figures on an average basis rather than comparing month by month? For example, if the overall turnover figure for January to June 2021 is lower than 70% compared to 2019, but if perhaps June 2021 is slightly over the 70%, will this cause a problem, or will revenue take the overall average from January to June?
Well, basically, they're comparing the cumulative up to the end of June with the same period in the relevant comparative period. So that's, I suppose, the same as saying they're looking at the averages. So it doesn't matter. You don't actually look at it on a month-by-month basis. They look on the cumulatives at any stage.
Okay. The next question there is, we file our VAT return every 4 months, January to April, May to August, September to December. Can I divide each period by 4 and use this figure as my monthly sales pre-VAT for those relevant 4 months for 2019?
I would not think that you'll be able to do that. I think you actually need to, fill in the actual figures for each month.
Okay.
because I mean that certainly could change somebody's eligibility. And, you know, yeah, so it will be a month-by-month basis, unfortunately.
Perfect. The next question there is, do we have to submit the EWSS review online for someone who has ceased their EWSS registration? And are there different rules depending on the cessation date? So that question has come in quite a few times, actually.
Yeah, it's a good question. And I gather as well that you don't have to do that because, you know, it really, that ERF is really just to establish whether you continue to be eligible for EWSS. So if you've deregistered, there's absolutely no point in doing that. So I can't see why that would be required.
Yeah, I would think if you do register before the 1st of July, you wouldn't have to. But if you've claimed from the 1st of July, then I would think you would have to. Would you think the same, Paul?
Yeah, just to ensure that your July claims, any claims made in
Exactly.
July are still qualify.
Yeah, so probably date dependent. Okay.
Yeah.
The next question there is, I have a client who started trading on the 22nd of October 2019, so 10 weeks in 2019. My question is how that is to go into the EWSS eligibility review to ensure the correct comparison is used. They could not know how many weeks October turnover will be. Do you have any advice on how to deal with this one and how it should be input?
Yes, good question. And it's a pity revenue weren't on the webinar this morning to answer that particular one, because it is, yeah, I suppose the whole objective is to try and compare like with like. So, you know, if one period is, you know, if 1 month entered is only like a couple of weeks, I'd imagine you'd be looking at entering the month that's going to be compared against that for the same amount of weeks. Either that or leaving it out entirely. I don't know the answer to that question. I think we need to follow that up with revenue, and perhaps, you know, send an email back to everyone on this webinar just to give them the answer.
Okay. The next question there is, if an employer has stopped claiming EWSS since March and hasn't received any EWSS payments since then, but hadn't in our deregistered through Ross, only through Thesaurus, do they now have to review even though they've not had any EWSS pay dates between the 1st of July and the 31st of December, or do they just need to deregister for EWSS through Ross now? So I would say just deregister.
Just deregister, yeah.
Yeah, perfect. The next question there is, a person who wants to incorporate their business into a company and are currently claiming EWSS, can they continue to claim the EWSS once they are a company, and what will their comparison period be for EWSS?
Yeah, the actual guidance suggests that it's the trade that matters, not the actual, you know, legal entity. So you're comparing, in this case, they're actually converting into a company. So they'd be using the sole trader figures or the partnership figures for the comparative periods. You know, presumably it's all the same trade. That's revenue's guidance on that.
Okay, thanks, Paul. The next question there is, if an employer claimed EWSS earlier this year and has stopped claiming it, have they to file anything as they are on the list as an agent for them? So I think this is kind of the same question again, really, isn't it? So yeah, we feel that once they've deregistered before the 1st of July, there's no requirement to do this form.
Yeah.
Okay, would an employer or company who is merging with another business in the next couple of months be entitled to claim EWSS until then? If yes, what figures should be entered in the prognosis at this stage? Should it be zeros? Perhaps some other action is required, like consulting with revenue.
Yeah, and I suppose the question I'd have there is why would they not be entitled to claim EWSS from then? If we're comparing, you know, just the trades.
I suppose it's a merge with another business unless the other business doesn't qualify.
Yeah, and the combined businesses are under the 30%. So what figures should be entered? But I think
probably is best to consult with revenue, is it?
Yeah, or just deregister, really, I suppose, if they don't no longer qualify.
Mm-hmm. Okay. The next question there is, am I correct to exclude EWSS income received and receivable as turnover in my monthly submission?
Absolutely, yes.
Okay. Lots of questions for you today, Paul. Thanks. What is the difference between...
I'm hoping getting them right, Audrey. You just keep an eye on what I'm saying.
What is the difference between income income, turnover, or customer orders?
Well, as far as I know, it's really only turnover or customer orders that are referred to in the revenue guidance, and customer orders, I suppose, would be mainly sort of relation to maybe say like a construction company who would be carrying on a good amount of work before actually the final invoice is issued. There's I suppose very few businesses that would fall into the category of needing to use customer orders for this particular exercise. But I think the overriding principle is that you're consistent in which one you apply. In other words, you can't change, from 1 month using orders and next month using turnover. Just be consistent.
Perfect. Regarding childcare services, do they have to tick that the new requirements don't apply to them each month? So I think Rachel covered in the presentation there. So you just indicate, I suppose, that you are childcare and that it's a one-off declaration.
Yeah, that's the guidance.
What happens if it turns out that you are not eligible for EWSS, even though it originally appeared that your turnover would be more than 30% less than the 2019 figure?
Well, if your estimates of your projections were reasonable at the time, revenue aren't going to take the EWSS back, providing you can prove that your assumptions were reasonable. I mean, revenue have taken a very, I suppose, pragmatic approach on this, and I guess they're looking at if anybody's abusing the system, where they're obviously making false assumptions. That's the only case where you really have an issue. But I mean, if everything's been carried out in good faith and the estimates are reasonable, there shouldn't be an issue.
Perfect. If you use the order numbers for comparison for EWSS, do you take the actual order number quantity or the order number value? For example, if there is a reduction of 30% in orders, but only 25% in order values, can you use the order quantity and not value?
No, it would just be the value.
No. Yeah. Perfect. Regarding employer eligibility for EWSS, if their turnover was actually higher for a couple of months in 2021 compared to the same month in 2019, but the overall turnover for the year ended December 21 has reduced by more than 30%, is the employer still eligible to claim EWSS?
Yes, I mean, at any stage, we're always looking at, what the year is going to compare with the comparative year. So it doesn't matter if some months, you perform very well, as long as the overall calculation for the year is less than, or sorry, is more than 30% of a reduction to the comparative period.
Perfect. Again, I think we've kind of touched on this, but if an employer deregistered for EWSS mid-July, does the eligibility check need to be completed on revenue? So I think we're saying if there's been a claim in July at all, that they should complete it.
Yeah.
For the comparative period, I have a client that was taken over under new ownership, but the trade is the same. When doing the eligibility review, it asks, what employer are you? Do I select new business or other?
It would have to be other in that case, because otherwise you wouldn't have the opportunity to complete the comparative figures.
Yeah. Okay. Maybe this is a little bit similar to a previous question, but what if your turnover is up and your orders are 30% down? Do you qualify for EWSS?
Well, you will qualify for EWSS as long as you've always used orders in the calculation.
The next question there, we are possibly looking for new hires in September due to previous staff not returning to work. Do new employees qualify for the EWSS scheme, or what is the cutoff date for new employee registrations to the scheme? Because new employees do qualify, there's no exclusion, except for connected parties that weren't previously on payroll. But yeah, we got a lot of queries actually after the last webinar and kind of throughout the last month about new employees and what was the cutoff date. So I mean, we have clarified that with revenue, there is no cutoff date, there's no change to new employees. Next one there is, we weren't 30% down on orders January to there's a word missing there, January to June maybe, but we are down over 30% on our sales for July 2021 compared to July 2019. can we still claim EWS based on the second half of the year?
Well, there's two things here. One is you're looking at the full year, so you're not just looking at 6-month tranches, and you need to be consistent in applying either orders or sales in doing those 12-month comparisons.
Okay.
So if one of those calculations, say if the sales calculation for the full year is more than 30% down, you do continue to qualify. Alternatively, if orders are used for the full year and you're 30% down on the order values, you will also qualify.
Okay. A good few people asking, Paul, is the turnover figure ex VAT?
Well, it would generally be ex VAT. Turnover is for accounts purposes is always declared ex VAT, and when your VAT returns, the figures are ex VAT as well. I suppose it doesn't really matter as long as you're applying it consistently, because it's going to be this. The 30% calculation is going to be the same whether you're plus VAT or ex VAT.
For both, yeah.
But generally, it would be ex VAT, and I think you'd be better off including the ex VAT in all cases, because revenue may do some comparisons with VAT returns, and if you're including the inclusive VAT figures, it would throw up some anomalies in that comparison.
Okay. Client commenced Cafe in February 2021 and is getting EWSS. How do they decide the figures on which to base the EWSS eligibility?
Well, this is where you're actually preparing projections on the basis of as if the pandemic had not occurred. Now that is a difficult one, and I think it's something you probably need to discuss with your accountant, and how to reasonably make those assumptions. But that's what the guidance is, so you're basing it on whatever you think would have happened if, as I say, there hadn't been the pandemic, and that's the comparison.
Thank you. Where a business has different sections with only one section impacted by restrictions, and as such only one section qualifying for EWSS, should the turnover figures for the whole business or just these sections be entered?
It would just be those sections, because if you do it for the full business and the revenues kind of calculation, the eligibility details screen that comes up would basically show you as being ineligible. Yeah.
Okay. Somebody's just asking, could you fill out the revenue form for the EWSS anyway to check if you qualify?
I don't see any harm in that. You probably know.
Does it
anyway
only show
beforehand.
for those that are registered, Paul? Or?
Well, yeah, sorry, yeah, I'm presuming this person is still registered.
Yeah, I wasn't sure whether, yeah, they were, they weren't, but it will only show for those that have registered for EWSS, yeah.
Yeah.
Okay. The next question there is, if a son, daughter, niece or nephew was on the payroll during July 19 to June 2020, can you claim EWSS for them, or are they connected parties and therefore ineligible? So I suppose it does all depend on the dates that they were on the payroll previously. So once they were on the payroll within, the required dates, then they're fine, they're eligible. Okay. With regard to projections for July to December 2021, these figures are difficult to calculate. Revenue have said that these figures should not change materially when amending each month, but what happens if they do?
Again, I go back to the point that if the assumptions were reasonable at the time the projections were made, and there's no attempt to abuse the system, these can change. Even though revenue mightn't expect them to change materially, they can. So it's just life.
Okay. Again, somebody else just asking, if a new employee is taken on in July 2021, can they claim for them? So yes, provided they're not a new connected. Somebody's just saying there that Ross is not showing EWSS in employer services.
Yeah, and that probably comes down to the digital cert for that employer, and perhaps the original registration didn't include them as handling PAYE matters. I think that's something, sometimes the accountant will have that and the client doesn't, or vice versa. I think this needs to be followed up with revenue.
Perfect. Somebody just asking there, if you deregister for EWSS on the payroll software, do you also need to deregister on ROS? So yes, Revenue wants you to do both, stop claiming and deregister.
Yeah.
Somebody's just asking there, can you kindly explain why the subsidy in some cases is higher than the employee's gross wage? So they're just the revenue rates. I mean,
Yeah.
with some, you know, you'll get more, and with others you'll get less. It's just, I suppose, just the revenue rates. Yeah. Somebody's just asking there, if an employer does not submit the EWSS eligibility review form by the 30th of July, the scheme is suspended. Do you know if the employer will receive backdated EWSS payments once they eventually do upload the information to ROS?
Well, our understanding is there will be some leeway granted. You know, it's not just going to cut off at the 30th of July. That there will be a period when revenue will probably follow up with the employers that are still claiming but haven't completed an ERF. But eventually, you know, the suspension will happen and possibly, you know, the refunds will be sought.
Okay, perfect. Sorry, I'm just trying to pick out any kind of new questions that we haven't covered, but somebody is just saying that accountancy bodies are looking for an extension on that July deadline. I suppose that hasn't filtered through to us, Paul, but or have you heard it?
No, I haven't, but it makes an awful lot of sense. It makes huge sense because, I mean, this is
just a small window, isn't it?
Yeah, very, very small. And also, you know, I suppose, you know, even the 15th of July date from here on after, like that's a very tight kind of window as well for people to actually to have their actual sales figures for the previous month. You know, their bookkeeping systems mightn't be that, you know, advanced, and small businesses, you know, sometimes rely on, you know, their accountants to produce that information a couple of months after they've submitted their box of papers or whatever, you know, so it's a difficult one. Yeah, so hopefully they'll have some success with that request.
Perfect. Interestingly, somebody has said that they contacted Revenue Ria Business who received EWSS this year, but they're not getting it anymore, and they were told that they still have to fill in that form. So, Paul, maybe that's something we could also follow up with Revenue and include in the follow-up email that goes out. Yeah. Couple of questions in, just if an employee has two jobs, can they continue to pay, you know, to claim EWSS for them? So it's provided, you know, the employer qualifies, the fact that the employee has another income, does, you know, it's immaterial, isn't it, Paul?
Yeah, the bans apply to each employment.
Yeah. So once the employer qualifies. A couple of people just asking, how do you deregister in ROS? So I think it's back into the registration screen, isn't it, Paul? Back in the same?
Yeah, same place. Yeah, as far as I know, it's quite easy to do.
Okay.
It's just a question of finding it.
Yeah. Somebody's just asking, is it possible to get a listing of all companies or employees you have the EWSS marker ticked for in Thesaurus? So I suppose within Thesaurus per company, you can go to the master file and it will show you everybody that is ticked for, but it's not possible to get a list of the companies that it's ticked for.
Yeah, no.
Sorry, a lot more about the childcare and just, you know, comparative periods. I'm just trying to see if there's anything.
And I presume everybody's familiar with the guidelines, or the fact that the guidelines have been published on the Revenue website, you know, covering the ERF and giving some examples of it as well. So, you know, if anybody's unclear, you know, the examples are reasonably good, although probably not detailed enough given the scope of the questions that have come in this morning.
Number of scenarios, yeah.
Yes, yeah.
Accountant on holidays here, should be at the Galway races.
Yeah, that's another thing about those damn windows as well. You know, people do go on holidays, you know, so, you know.
Yeah, absolutely. I think, to be honest, we've covered most. You know, there's a lot of us had similar kind of questions, but I think we have covered most of them there. Unless, can you see any, Paul, there that you think I've excluded, or?
No, I don't think so. So we have two follow-ups to pursue, and the one is the mid-month sort of situation or scenario, and the other is continuing to have to complete the ERF even if you've stopped claiming or deregistered.
Yes, if you haven't claimed since the 1st of July, yeah, they're still having to do it.
Yeah. Now, sometimes we do find, you know, when employers or accountants ring revenue and ask these questions, sometimes they get different answers. But I think we know the right people to ask, so we can follow up with those.
Yeah. Yeah, I think that's pretty much most of them covered, and we'll follow up on those couple of things.
Great.
Okay.
Thanks, Audrey, and thanks, Paul, as well. I know there was a lot of questions there, and a lot of the ones that haven't been answered really all are repeat questions, really. But yeah, we will send out a follow-up email later today, and it'll include a link to the recording of the webinar. It'll include a recording of the revenue presentation that they recorded in advance, and we will get clarification from revenue on those two questions as well. So I'd like to thank you all for joining us today, and we hope you found the webinar useful. Thank you. Bye.
Okay,
Thanks everyone. Bye-bye.